Welcome back to Small Caps again, ladies and gentlemen. Once again, my name's Kerry Stevenson, and it's Truth Bomb Tony Tuesday. How's that? Truth Bomb Tony Tuesday, or Wednesday or Thursday, whenever you're watching this. Tony, welcome back to Small Caps. Been a couple of weeks now. Boy, there's a few things going on at the moment. We've got Canada freezing bank accounts. We've got the $200 billion man, that would be Vladimir Putin, deciding that he might change the world. And gold over 1900, oil stronger, but the markets still seem a little bit skittish.
I think the world's gone batshit crazy, and that's now on steroids, where you have all these certain people threatening security, threatening our well-being, threatening investments. I love watching Clive Palmer throw away millions of dollars on useless advertising, but what's happening in the world is heading towards darker times. And I see a lot of positives coming out of the reset we're about to experience. It will provide, a bit more equilibrium in the world. The youth of today, 13 and 14-year-olds, I reckon have a decent chance once they watch the mad consumerism and all that crap blow up and speculators' leverage get blown up, hopefully not literally with bombs and threats. So it's certainly beyond interesting times. And at the moment, I've never been more enthusiastic about my core companies, but I'm fighting clients who are approaching peak pessimism.
What do you put that down? Like, is that peak pessimism because of the volatility in the markets, because of the uncertainty with Russia and the lockdowns and inflation? Do you think people are, it sounds to me like people are starting to say, not listening, not listening, not listening.
Well, when they see share prices that don't move, it brings them down. When a stock falls below what they paid for it gets depressing. But on the flip side, humans are programmed to buy high and sell low. Yeah. And the reason why they fell in love with the stock in the first place hasn't changed. And it's just falling in love with the right woman, which I've done. And then and then you look at it 2 years later and you look at them and you just appreciate everything they do for you. And a big shout out to the Hungarian women, who are fantastic.
Yeah. What are the Hungarian men like?
I've got no idea, but
asking on behalf of a friend, Tony.
Oh, okay. Well, I'm always asking on behalf of a friend. I love it. I haven't researched that sector. But,
well, maybe you need to do my friend a favour. Anyway, listen, let's get back to the psychology of markets, because that's what it's coming down to. It's coming down to the psychology of markets. It's coming down to people not fully understanding why they invested in the first place. And the fact of the matter is that these companies haven't changed. It's the sentiment that's changed, and therefore they get a little bit despondent.
Beyond despondent. And unfortunately, one of my best companies, Chimeric, is going to the market to raise 18 million, but it's when the share price is at its lowest, and that can bring people down. But if they bother to read the presentation, they'll see that this is a massive opportunity, and those research reports suggesting 84 cents can still be pretty much spot on. It's just every stock really throws a bit of a tantrum, and it's mainly due to weak shareholders who don't have a strong threshold for any days down, above 1%, they panic. And that's what I've seen over 24 years in this business. And my most valuable asset is my IP. And that's having a sample of, I'd say, 3,000 people and getting to know 3,000 speculators, what their fear, greed, and stupidity levels are. And to me, that's worth millions. And that's what I translate the wealth for my clients, Kerry, despite all the shit we're going through in the markets.
What do you say to people that are out there saying the markets are a bit frothy, now's the time to get out, there is a crash on the horizon?
Well, markets can drop hefty percentages from an undervalued level. there's always, you've got the major indices. I obviously have protection against those falls. But if you look at the tech stocks, NASDAQ stocks have been slaughtered. Facebook, I think, Meta dropped 26% in one day. These stocks are behaving erratically outside the major indices. So a lot of them have already undergone their correction. You might see a day or two of capitulation, but I've never had a fundamentally sound company let me down, even though at some point they've halved or had to raise money at stupid cheap levels. So the theme's the same, but human psychology just hasn't changed, probably since the 1600s. So what gets me tired and worn out is the psychology battle I have 30 to 50 times a day sitting here in my office. Now, sometimes 100 calls a day. So
he's a busy man, ladies and gentlemen. But Tony, do you think the situation in Russia, the uncertainty around that, is starting to spook markets a little bit, and therefore people are sitting back thinking, maybe I should just take my foot off the pedal a little bit?
Well, there's always a consensus that the perception of war can be good for metals, it can be good for gold and silver, can be good for platinum, palladium. I think throughout history, we've had a lot of conflicts and markets recover from it. I think once you're a speculator, there's always something to worry about. And you can be the most confident person one day, the Dow drops 600 and you feel stupid the next day. So my view on how I run my business and clients is to just plow through it all, look at half price opportunities as exactly that. Because lately, when I've been ringing up clients saying, look, you're up 4 to 10 times on these stocks, these are from a couple of years ago, sell it, and they treat me as though I'm a criminal and they're suspicious as to why I'd get them to sell some stock. So the best lesson is to get a grasp on the psychology of speculation, which I've done finally, probably after 25 years of trying to work people out. So it's a long journey for those starting in the market. And what we have, when we have a correction, just say the biotech sector, every biotech is starting to be priced like it's a rubbish company. It doesn't discriminate. What will happen is once this volatility settles somewhat, then the quality will rise to the top. And that's the same in mining. And as I keep banging on, some of these lithium stocks have performed extremely well. Their market caps are stretched. Some of these assets, it's just time to get the hell out, regardless of the thematic. I'd much prefer going back to simpler themes such as copper, gold, and silver, and uranium, which has already served us well.
It's interesting you said it, and I'll come back to uranium in a moment. But earlier you said that if you invested in the company in the first place, if it's a solid company and you like what you see, then you shouldn't be getting out of it. But you just said there are times when you should. In other words, if you've made 4 to 10 times your money, time to take some profit off the table. So not to stick with a company through thick and thin, even though it might be a good, strong company that you believe in. Is that what you're saying?
I like to keep capital moving.
Okay.
I call it the two-step. Sell one 5-bagger, a part of it, to invest in another 5-bagger. I've just discovered an opportunity, which to me looks the most obvious 5-bagger I've ever seen in my life. We will go full bore at it. I'm not going to mention it yet. But to me, why not sell something that's going sideways, that has done the hard work for you, and switch to something, keep some capital moving rather than just stay. I just think buying a portfolio and sticking your head in the sand doesn't work unless you lose the shareholder notice of the likes of Fortescue or some other stocks. So just keep a bit of the capital working for you. Some other strategies I use with clients is to put them in lower quality opportunities that I know the masses will flock to. These can triple 5 times, but I understand that they are lower quality. and they're heavily discussed on the forums, and that's the time to get out. So, I mean, I cover 20 companies. I know them intimately, and that's what I'm going to do. I'm going to plow through all this Russia business. Rising interest rates probably is a much bigger threat than Russia, and we're looking at an RBA increase in May or June, and they should go 0.4. And
am I going to lose my bet, am I?
I'm going straight to Dan Murphy's with your voucher. But, I mean, people should have a look at the table I put up on Twitter this morning. That will scare the Jesus out of you. It shows historical house prices, wages, average wages, mortgage size, and interest rates. It's awesome and frightening at the same time. So I just hope that those that have won lotto on these assets haven't upscaled or put it on the hook to their kids for them to try and get rich as well. So I think
you've been saying for a while now, Tony.
Yeah, but I'm right, Kerry. You can have a mini speculative blow-off, which you've had in Sydney, but the rest of Australia has been left behind. And to me, that table spells Sydney house prices will halve. Not maybe. We'll get cut in half, and then they're still expensive from there. Read the table. It's a horror movie right there on my TV, to steal a line from Skyhooks.
I love Skyhooks. So you're still sitting here saying it's going to halve, not maybe.
Well, no, it's not 30%. It's 50% off now, because we're going to go into a stagflationary environment, which is an inflationary recession. The RBA has waited far too long, and they're going to have to start lifting rates. I mean, they're talking 9 rate rises in the States. You cannot have a speculative bubble of this friggin' magnitude in one capital city that's congested, and it's just like buying a lithium company that's got tenements on the moon. That's the top of the cycle, and that it's not going to stay like that. I implore people to do a little bit of research, but there are parts of Australia where you can live comfortably without financial stress. So, and speculation is a good way to alleviate that if you're able to develop the right mindset for small cap stocks, and you start to see what makes a successful company. You listen to Rick Rule, you listen to the companies at your virtual gold conference, you're miles ahead at the person in the street that's just asking their mates about crypto.
Yeah, that's true. That's true. You talk about, just before, you talked about what I call the velocity of money. In other words, don't let your stocks just sit there doing nothing, that you think that there has to be some movement. I tend to agree with you on that one. Do you think that that's important? Because money is energy in a way, and if energy sits and does nothing, it stagnates. But if you keep it moving, then it's more than likely that you'll have a better chance of increasing your growth strategy, I guess. Would you agree with that?
Totally. But I have a whole mid-tier line of clients that bought these quality stocks that are doing nothing. They're underwater. They probably want to punch them in the face, but their momentum turn will come. So sometimes...
What's going to be the catalyst for the momentum turn, Tony?
Well, once investors and speculators can separate sewage from gold and champagne, it's as simple as that. Every bubble leads to bandwagon jumpers. It leads to the most rubbish projects being listed on the ASX, and no one can differentiate them because everyone just wants the lazy buck. They want to jump on someone's coattails on Twitter and think they can get rich, and the party ends when they start buying. So the good thing is about investment, there's enough cynics of all this digital crypto NFT complete and utter garbage that will fund.
Some people are making some money from it.
They will fund medical research that will allow treatments for the likes of cancer, cholesterol, and that will fund putting copper mines into production, which is going to be the lifeblood of all this EV and green energy. So the good thing is all these kids are going to blow themselves up on crypto. They're never going back to the ASX. They'd be better off getting the Sportsbet app. But there's enough people like Warren Buffett of that ilk to fund this new wave of investments, once the investing atmosphere gets back to basics, which it does. I mean, between .com and uranium, it was 5 years of nothingness. No,
that's exactly right. But one of the things I just want to step back on this, and then we'll go into gold and champagne, my favorite subjects. If we can just step back for a moment, you mentioned interest rate rises, and you said up to 9 over in the US and a couple here. Governments know how tricky it is if they crash the property market, because all governments care about is getting re-elected. They're not overall concerned about the health and well-being, but they are concerned about being re-elected. So my question to you, Tony, is would they allow that to happen? The market to, as you say in Sydney, come down by 50%. I can't see that happening.
Well, the bond market's telling them they've got no frigging choice. And who gave a shit about the people in Perth that bought it in 2006 that 16 years later are still well underwater and can't sell their property? I mean, at the moment, all the RBA is doing is trying to manage a property bubble when they should be managing an economy. And Sydney isn't the whole of Australia.
True.
So too bad, so sad. Interest rates have to go up, and they've lifted them in New Zealand.
Why do they have to go up?
Because of inflation. It's the only way to curb inflation, and it's been the only monetary policy throughout time that's been able to do it. And we've been so spoiled here in Australia, but the long-term average RBA cash rate is probably about 6.25%. That's long-term. And that's all in that table. So no, it's too bad. Interest rates are not going to stay at 0.1. I'd expect the RBA to shove them up to 0.5 and then go in quarter increments, probably with a nasty rise in November whilst we're all sloshed on Melbourne Cup celebrations.
And you're drinking that.
I'm just at the point where, okay, the COVID blow-off has made me look temporarily stupid, but I'm not wrong. And anyone that's gone out thinking this is the new paradigm and this time is different, which are the 4 most expensive words in history, and upscale, is going to get absolutely slaughtered. And that the over-leveraging is frightening, even though just coming out of the recession, rates just came off 17%, but there was not that level of debt where we've got the youth that are struggling with their buy now, pay later. We've got this culture of buying crap we don't need to impress people that don't like us anyway. It's consumerism gone nuts, and we're going to have that reset shortly once all these overpriced assets pop and life gets back to basics. Waiting a year for a BMX bike or a toy instead of having everything on tap. I just think, this is going to be a recession full of curbside clear-ups with all the crap we're trying to get rid of. It's going to get very ugly, and families have the chance to reassess their balance sheets, but the financial literacy in this country is so low, it's not funny.
Well, we're going to talk about financial literacy in the moment because I believe you're going to be doing something for people, which I think is important. But before we do, let's take the champagne and put that to one side for the moment. Let's talk gold, my favorite subject. Obviously, people are looking at it as a bit of a safe haven with Putin shaking his saber a little bit. Is that what's driving the gold price, or do you think it's been suppressed for a little while and this is just the natural way for gold to catch up with everything else?
I'd like to go back a little bit, where a car bomb in Kabul or Afghanistan or wherever, Baghdad, would put $30 on the gold price. Remember those days?
I do.
A little bit of tension. Yep. I think now gold has become more a play on currency. If everyone expects it to be safe haven, then they're going to be disappointed. The gold price, Australian gold price, sitting around 2,600.
Correct.
Some of these gold companies can spit insane amounts of cash. The last real gold stock bubble was in 1978 to 1980. We had a bit of a dash in the 90s, but that's where you saw 3 cent stocks go to 10, 20 bucks. That's the true madness. So the average speculator in Australia is nowhere near a gold bubble scenario whatsoever. And I think it's going to take a lot of these other sectors to run out of puff, see buyer exhaustion. People realise that a lot of these crappy assets will never be developed, then get back to basics. Because once you catch gold fever, it's infectious. And who would have thought coal and iron ore would become sexy punting commodities? So once it catches on, and I can see a lot more upside for silver, I just think that that's the poor man's gold.
I agree with you. Do you want to talk about any stocks that you particularly like at the moment before we run out of time?
I'm just buying my biotech basket, the usual Narada Exafarm, Chimeric will go in that. Radio Farm's just above half what it listed at. Brilliant company. No shock to see that in a couple of dollars. I'm preparing for one of the biggest bets I've ever made in the mining sector. More on that to follow, which gives probably the best multi-commodity focus I've seen. We're just tiptoeing through the tulips, picking off stocks, looking at stocks that could increase 10 times in value. And just also there are some gold stocks trading around a cent. Alchemy 1.2, I really like. I think James Wilson is brilliant. Bill Beeman's bought Woodlawn with Develop. Yeah.
Oh.
He's stolen Woodlawn. I've actually been to Woodlawn twice, and that project has a habit of sending companies broke, but if anyone can do it, Bill can. So that's...
Yeah, because that was Heron Resources back in the day, wasn't it?
Yep. It was Tri-Origin, morphed into Heron. I think before that, it sent another company broke.
Yeah, so why is this time it's different? Because Bill's got his hands on it. I guess it could be exactly like Fosterville. Plenty of companies couldn't make that work either.
He bought Paulson's when no one else would have it, and it was hedged badly and not performing. Bill has underground mining experience with Barminco. So Bill's got a canny eye for buying undervalued assets. The reason why I mentioned Alchemy was that Heron had some joint ventures, so there's some breakup value there. I think Alice Queen at 0.7% is one of the biggest punts you can have, but they've extended that strike on Horn Island. They're going to be drilling some juicy gold targets, and they're all about exploration. So that's a stock under a cent. Metal Bank at 0.6 in Scotland is going to build a real copper gold company, perhaps with a Middle Eastern acquisition to come. So 0.6%, a lot of cash in the bank and the right management and sticky shareholders. So that's another stock you can buy at 0.6%. So I can look at the quality biotechs, then put people into the lower priced gold opportunities. Pac Gold looks like potentially a couple of million ounces. It had a pullback from $1.02. I guess expectations were higher. That's still only capped at 35 million. Look at 2 million ounces, multiply the market cap by $80 to $100 an ounce. I had a lengthy Zoom call with Peter Ledwidge from Mako.
Yep.
What a fantastic story. That they're going to come out with a maiden resource shortly, before June, he tells me. But that growth of that company is the adding ounces could become exponential. Maybe one day 2 million ounces. Give it an African discount with a Cote d'Ivoire flavour. Probably comes in at about 140, 150 mil cap. I think they're capped at about 30 now. Allow some dilution. To me, that's the valuation upside. You've seen West African do it. You saw Cardinal get taken over. And also there's one I am so excited about, which just had a month listing delay, is Far East Gold.
Oh, I know. That's really interesting, isn't it? Good management that understand Indonesia, and this is a massive opportunity.
I had a Zoom call with management. Wow, what professionals, what a team. I mean, Justin Werner runs nickel mines in Indonesia. He obviously does all right there because I think they're capped at over $3 billion and are one of the largest nickel producers in the south.
That's right.
Yeah, southeast region. So, and that big project is potentially one of the largest undrilled copper gold targets you'll ever see. And if that starts to join up, holy hell.
Holy hell, I agree with you.
Holy hell. And you've got 1 million ounces with an EV coming in at about 30 million. So that's priced for upside. I've never heard a combined management team on a Zoom call talk so well. So I'm going to end up with bloody 20 stocks on my Twitter list, damn it. But I've just revealed the 19th. The 20th will be revealed shortly. And looks like finally long-term loyalty is going to pay off, and dealing with professional people that don't jump on every bandwagon and blow your capital structure to smithereens.
Tony, I would like to ask you, it's a bit of left field for you. We haven't spoken about this, but I would like to ask you, Aston Minerals, ASX ASO, that did hit quite big nickel sulfides over in Canada. Have you looked at that at all?
Yeah, Tolga Resources, who needs no introduction, who everything he touched turned to money. Well, not necessarily gold, but if he's excited about it, he's probably due for a bit of a run. So I believe this used to be European cobalt, which
that's right, European cobalt. Then that didn't work out, but they found this one, and it's gold and nickel, but it's the nickel that I believe he's more excited about.
Well, you can never blame Tolga for not trying. If one venture fails, as Neville Chamberlain said, try again. And that's what Tolga's doing. So I've watched his success. I haven't been terribly involved in his companies, but, with the nickel thematic, it could probably do far worse. And he's probably overdue for a massive win. So certainly one to watch, Kerry.
Okay. Finally, uranium, you mentioned that a little bit earlier. We're running out of time, but I just want to touch on that thematic. My thought process is that if Vladimir Putin starts the drums of war, he does have nuclear capability over there. Is that going to scare a lot of people away from, nuclear as a fuel source? That was my thinking, was that maybe it's just going to scare people a bit to stay away from the uranium stocks. What are your thoughts?
I think the uranium sector ran too hard on the Sprott hype and what they were doing. I think a lot of these uranium stocks 8, 9, 10 bagged when they probably shouldn't have. It's going to be steady growth from now, but I can't see anyone coming remotely close to using nuclear weapons or even threatening it when you've got friendly European countries a short drive away. I just think that at some point, common sense will prevail if that ever does.
I certainly hope you're right, Tony Locantro. Always good to chat to you on the Small Caps channel. Lots of information there, ladies and gentlemen. And as Tony said, it's the psychology. This is the everything bubble, the psychology around the markets. If you think you're onto a good thing, stick to it. But at the same time, you need to have velocity of money. Tony, the last word's going to go to you because you're going to be doing a course around finances, because a lot of people aren't taught this at school. Do you want to just make mention of that?
Yeah, basically one client asked if I could mentor his son. So this is blowing up into a side gig. I'm not doing it for greed because I don't really care I just need to be paid for my time. But I'm going to teach kids real world finance. I'm going to have one interactive Zoom for kids under 17 so we can play nice in the chat room. And then I'm going to do it for adults. So I'll cover everything from finance, how to build long-term wealth outside of traditional sectors, how to incorporate gold, silver, platinum into the growth strategy, how to build the right mindset not to go out and buy, not to be heavily focused on Jordan sneakers and crap to impress people, how to get a car financed, all of that. It'll be 2 sessions, interactive. Then I'm under pressure to write an advanced stock market course to sell people my 25 years of experience as well. So I'm going to be busy. This is a bit of a side gig, and thank goodness I don't like fishing or golf because I'd have no time. But anyway, if they want to get involved, I don't know, email me, tony@altocapital.com.au. But as I said, it'll be so attractively priced. It's less than a couple of decent rounds of drinks.
There you heard it from Tony himself, tony@altocapital.com.au. If you want to understand a little bit more about finance, what makes Tony's brain work, a couple of sessions there that he's going to do for you, a little bit of payment for his time, but it's not like these big expensive courses out there. But Tony has a lot of knowledge, which he now wants to share with all of you to make us all a little bit better, a little bit smarter, a little bit wiser. Tony Locantro, thanks for joining me on Small Caps today.
Always an absolute pleasure, Kerry. And hello and goodbye to the audience.